Welcome back. Mahantesh Sabarad also joining us this afternoon. Mahantesh, a little quiet on the index today, but still looking good. We've got some positive action coming in across the screens. A lot of action continuing to build, for example, in a Tata Motors. So let me just start off with that. Even the DV today is up about 10% or so, and we've seen a constant build-up in the stock on the outlook with demand, going forward. What's your take when it comes to Tata Motors?
So let me put the perspective here. Automobile companies are generally doing well in India since the lockdown is getting gradually lifted. You would have seen that the automobile sale numbers that have been coming out from most companies are either showing growth or the decline is being very small. Tata Motors is no exception. Secondly, Tata Motors recently, through their chairman, actually made a statement about reaching zero debt levels for the company. On a consolidated basis, the gross debt level for the company is somewhere around in excess of 1 lakh crore. Net debt is slightly lower, and within that debt, there is automotive debt and there is financial debt. The automotive debt is what the company is intending to bring down to zero levels through various measures. While the intent is there, the challenge and the target is too ambitious, according to us. I think the stock in the recent past has rallied on these two counts. Count number one, which I told about sales gradually recovering, and the second related to the net debt position of the company, which they intend to bring it down to zero levels.
Okay, so still sounding positive on auto there. We've got, quite a lot of red as well across some of the financials, Reliance. I mean, there's not deep cuts, but just looking a little tentative today. Also from auto, M&M's taking a bit of a break today. So M&M escorts are down about 3% and a little quiet in today's session. NTPC, UPL, some of the other names there as well. Mahantesh, as the market kind of figures out where to go next, how are you managing your strategy? Are you remaining cautious, sticking with preferred plays? Are you looking at anything as an opportunity right now at slightly lower levels?
To be frank with you, I think when we were looking at the market way back in March, we were really unsure about where the bottom would be. But then the bottom formation was pretty quick. The recovery was sharp. We have seen that the stock markets have recovered almost on a V-shaped basis. And much of the recovery is owing to the fact that we have had gradual unlockdown phases for our economy. So while we may have posted a very bad number in terms of decline in economy, fortunately, we are progressing towards the fact that the unlock will help economic activity regain momentum. And as the momentum builds up, we should be able to see the market side. So with this background, we are telling our clients to remain invested, gradually take on more and more bets, but then you have to be very selective about the sectors that you would bet upon. And that's the kind of advice that we are giving. So caution is there, but be selective in terms of the investments that you make. There's no need to really panic and remain very low in terms of your portfolio allocations to equities.
Is media sector as well as IT and FMCG. Mahantesh, let's get in your take on media. Where do you stand here? Because it's a long road to recovery when it comes to some of those multiplex companies, although they've been looking at alternate revenue streams like those drive-in cinemas, etc. But do you think that, it's a long way to go before we actually see incremental revenues flowing in? And what's the word on print names as well?
About the media sector right now, it is in deep pain, and I suspect that that pain is not going to go away pretty soon. Irrespective of whether we have the lockdown getting lifted in a couple of months or so, media companies, including the multiplexes that you referred to, will have challenges ahead. Multiplexes in particular will have to adapt to newer norms related to let's say, social distancing and so on and so forth. I would reckon that from an investment point of view, none of these companies right now appear lucrative despite the stock fall. there are better companies or there are better sectors which are either poised for growth or are posting good amount of growth even in these conditions. So media companies is something that we would advise our investors to stay away from currently. And multiplexes is a challenging sector right now. I don't know what valuation multiples and what valuation metrics people are using to keep the stock levels higher. Somewhere I feel that those companies will correct quite sharply down.
Mahantesh, where do you stand on Tata Consumer? Do you also believe that this is a long-term bull story and it can be bought right now on dips?
Yeah, I think the good part about many of these consumer names, including Tata Consumers, is that they do generate cash flows. Okay, consumer durable companies as well as FMCG companies are generating cash flows even in this lockdown phase. They have been seeing sales recover quite gradually and in some cases quite sharply up. There are differences in performances that you will notice. In particularly, what we have noticed is that there is an element of market share gain that some of these larger companies are able to do at the cost of the smaller MSME kind of companies or the so-called unorganized FMCG companies. There is a market share gain that is shifting away from those unorganized players to the organized players, and the beneficiaries are these listed entities among the consumer names. So that trend being well entrenched or well recognized now, we do consider them to be an investment idea even now.
All right, let's hear out a comment from Maruti as well this afternoon on demand trends.